All right, this is day 3 of if I had to start a trading career today, and this one is picking your stocks. Now, there's a lot of people out there that will pick the their trades for the day based on the volatility of the stock or what's currently out there in terms of volatility. Like one day Palantir may be the highest volatile stock, and their options have high premium, or another day Tesla will have extra high volatility, and they'll choose them. But they may not actually want to own those stocks. They're just using filters and they're using search engines to find the most volatile stocks. And that's not what I do. I do the exact opposite. What I do is I look at the stocks I want to own, the undervalued stocks, the stocks that fit into my diversification. So I have a lot of criteria they have to meet. One, they have to be all diversified. I can't do Kraft Heinz and MO and just do those two because those are both food and tobacco. I'm not going to do all energy. I'm not going to do all, auto. I'm going to mix it up a little bit because I want diversification. That's number one. I want to be diversified. Number two, they have to be undervalued. They have to be undervalued. So MO, Cisco, AT&T, this is their price target according to analysts, and this is their actual share price. So this is the value. This is the difference between the two. So this is undervalued by 10%. Halliburton is undervalued by 40%. Uber is undervalued by 14%. And then Intel, I do like Intel, but is currently overvalued by 14%. So I'm not currently trading that. And another criteria is that I like to have a dividend. If you look up most of these, they're going to have pretty high dividends. Some of them don't, like they suspended their dividend. Let's see, Under Armour, I believe, doesn't have a dividend. Penn doesn't have a dividend. But there's still stocks I like. And to get fully diversified, you're going to have some that don't have dividends. There are a lot of stocks that don't have dividends, but they contribute to your overall diversification. Now, another thing is on top of the diversification, you have to have the stock price be relative to how much your balance is. So if you only do 10,000, if you only have 10,000 to work with, you don't want to Tesla in this, because check out Tesla. Tesla is currently trading at $213. $213. If you get assigned a cash secured put, you own $21,000 worth of Tesla stock. $21,312 of Tesla stock. Now, you can't do that if you have a $10,000 account. So that's going to be your entire position. It's going to be all Tesla. So you also don't want to maybe have Apple in there, because if you look, Apple is $189 stock. So if you got assigned this, or $184 stock, if you got assigned this, you'd have $18,492 of Apple stock. So you have to make sure that the price fits with your balance. So I typically like to keep I like to keep not 100% cash, but 50% cash. So if I'm 50% cash, I could own all these outright at 100 shares and still be fine. So this is where how much of the portfolio takes up. So if I got assigned Altria, that'd be only 3% of my portfolio. If I got assigned Dish Network, that'd only be 0.5% of my portfolio. So if I got assigned all these at the same time, I'd be $114,000, which is fine. So, and then if I did get assigned in my margin account, I would only have to put up 34,000, which I would have over 70,000 in cash in my margin account if I got assigned all these. Oh, I like to do ETFs as well. ETFs nearly don't pay as much in terms of options. premium, but they are a little more stable, and they are a little easier to predict. So I go out here and I see what the upside is, and I only trade the ones that are positive. So my first one is Altria. It's 48.50 is the price target. It's a 10% upside. Let's look at the snapshot. The snapshot shows that it's currently paying a 8.5 dividend, which means that I am going to collect 8.5% if I get assigned this, and I have to keep it for a long time. So that's part of the wheel strategy, is that you collect the dividends, sell it, or you collect the dividends, sell the covered call. If it gets assigned, you put in a cash secured put, and I'm going to cover those in later videos. But put together a list of your stocks that you want, and you can go out here on stocks, and you can do stock screeners, and you could put in the price you want to mess with. So if you can only afford a $25 stock, so if your max is $25, put 10 to 25, and you currently have 1,851 stocks out there. You could do, let's say, mega cap and large cap and mid cap. You want to stay away from these little ones. That's 359 stocks out there. So there is a lot of stocks out there. Okay. Then you could even go by performance. Let's say you like Reuters as an analyst. Then you could put neutral and positive, and that's 205. Let's say you like Morgan Stanley, equal weight, overweight. Now you're down to 91. Okay. So let's view results, and this will give you a starting off list of the stocks that are within your screen. So another thing you want to look for, the last thing you want to look for, is how often they trade. How often they trade. So let's see, T is on your list. Go to AT&T stock. Take a look at it. Let's say you got your analyst down. You got that 7% dividend. Your analysts say it's on the upside. It's going to be, where's my price target? Come on, price target. Price target, 37% upside on that. Then you go to options, and you look at the options. These have weekly options. See, June 23rd, June 30th, July 7th, weekly options up here. That means it's pretty volatile. Look at the open interest. Look at the volume. These are both pretty decent. You can trade these without a problem. Okay, so that is day 3, is pick your stocks and only do those stocks. Don't jump stocks in your weeks or during the week. Don't just say, I'm going to start trading this stock. No, do the research on the weekends. Open up Monday with the list of stocks you're going to trade, or you're going to at least look for trades on. Okay? That's how you get good, is because you know the stocks and you trade them for a long time and you get used to their movements and their levels. We're going to talk about levels here in a couple more videos. All right? That's day 3.